Welcome, everyone. My name is Rick Dwyer with Tactive, along with Rob Isbitz over at Sungarden. Hey, Rob, good to see you again. How did the models react in light of the market activity this week?
Hey, Rick, exactly the way we hoped they would, given the way we set them up. You know, there's a lot of pre-thought that goes into every move. I've told investors many times that every model change we make at Sungarden usually has at least a 48 to 72 hour pre-consideration window. It's served us well recently. It served us well this year. You asked how we're holding up, and I kind of gave the answer, as expected. Our path for the end of the year into next year, unless something changes subtly, is to take that very, very, very large range of possible returns that the stock and bond markets give us and shrink it down to a very small range of possible outcomes. And that's the mode we're in for a while, which is why 40% of the core portfolio is in ETFs that buy T-bills. We're basically laddered from 1 month out to one year in bills. And the rest of the portfolio is what I would call very arbitragey, where we have a single long position, a few short positions, and a little bit of cash. And that's the portfolio. And I guess one of the ways that I judge it, because who's more critical about managing the money than the actual manager, certainly the case here. But we had I think maybe 2 days this week, where every single position in the portfolio was either up or like zero. And when you think about it, these were down days, up days, didn't matter. We're about as market agnostic as you're ever going to find us. And that's kind of been the key to our success this year. Just not really wanting to play along with what has been an extremely volatile market at times. And going into the end of the year, next week we could have some fireworks, a couple things coming up.
Sounds good. Anything on that is going on with your other strategies that you want to discuss, or is everything pretty much what you just explained laid out? You've kind of compressed the range, and you're just kind of following through until you see something different?
Yeah, I think I would say this, and I do a lot of writing now for Seeking Alpha. I'm going to try to combine the last article I wrote there with what a guy named Felix Zuloff said. I was listening to a podcast this morning. Felix Zuloff, a Barron's Roundtable member for decades, probably one of the smartest strategists in the world, and based overseas. So he was talking about how the next decade is going to be a decade of roller coasters, and the roller coasters are not going to be so much day to day, although they may be. But again, his concern, and I think my concern as a strategist, is the roller coasters. Think of it this way, okay? Everybody's looking for the pivot, the bottom, etc. Even if you do get that, that's just likely temporary, because inflation will ultimately, maybe it will drop from the peak, but there's a very good chance that it will accelerate again. It might be next year, the year after that. But I think that we're in a decade here where things will be very roller coastery, and that's why tactical management works, especially as a substitute for what we used to use bonds for. The one other thing I'll just mention quickly, and this is much more short term. So here we are recording this on December 9th. And 4 years ago, which was also kind of post midterm elections, but I don't think it really matters that much. But 2018, the S&P 500 from December 3rd to December 24th fell 15.6%. And then Santa Claus showed up with the reindeer, and apparently everything was fine. Well, it's a little different environment this year because we just had a really crappy year for stocks and bonds. And maybe the recovery won't be as strong. So I wrote this article. It's very interesting because, you get to hear from different investors, especially retail investors. Some thought it was a great piece. Others said, oh, you're trying to make something a pattern that isn't a pattern. Well, either way, I will say this. Next week, we have two pretty big events coming up, right? We got a Fed meeting, and before that, we got CPI. And then after that, it's assumed that Wall Street's going to kind of go on holiday for the last half of December. And maybe they will physically, but don't be so sure that the markets won't do a 2018. And not a prediction, but just one of the possibilities to look for, because everybody's thinking, oh, okay, the year's over, the market's down about what it is. Between now and the time Santa gets here, and especially by the time they drop the ball in town in Times Square, New York, there could be more to happen, and we'll be on it.
Yeah, and with PPI coming out today being higher than expected, so we'll see what happens going forward. So, it's always interesting to try and read between the tea leaves a little bit there. And thanks for your input, Rob. So advisors, if you have any questions on the Sungarden strategies, feel free to reach out to Rob and his team. For any clients or potential clients watching this video, feel free to reach out to the advisor that gave you this video and ask them any questions about how the Sungarden strategies could be beneficial to you and your portfolio. Rob, next week will be our last update for this year. So look forward to talking to you next week. And in the meantime, have a great week.
All right, you too, Rick, and everybody out in Tactive land. Thanks.
Bye.